Good evening. Ira Epstein with your SPDR ETF wrap-up, along with some stocks. And this is going to be for Wednesday, the 29th of December, 2021. All right, my friends, here's what you want to do. You want to stay out of harm's way. You now have monstrously low volume, and it's going to get lower tomorrow and Friday as traders start taking off, and that's what they're going to do. I already am making my own plans for the afternoon, running around doing errands. I never do that. I stay home and watch the markets. When the markets finish, I'll go out and do errands for a short while. But it'll be different. You know, there's just not much you want to do in the last 2 days of the year that can't get you into trouble. Some people will window dress, others will do whatever, but that's pretty much the thinking of the market. So if we take a look, you can see Tesla down again. Elon Musk last night sold another $1 billion worth of shares, paying his taxes, buying options, you know the game that he's been in, and the market absorbed that very, and of these well, because it realizes he's coming to the end of that process. Other markets down a little bit. I'd expect that. Why wouldn't Amazon go down? It's seen its surge. Now we have to wait for the earnings reports and all, and you're not going to get those right away. We know the retail sales were up. You don't keep discounting the same news. When I look at the financial services, you've gone into a pause in the market. Again, this chart is full of gaps. I'm not going to keep showing it, by the way. Next week when I come back, I'll have a different one, which brings me up to this. You have a market that you want me to cover, where I rip them apart and I show you the bear chart and we lay on everything onto it? Bring them up to me. Write me on YouTube. I study everything you put out there, and we'll make one. We're going to keep rotating every week, so you're going to get different ones. And as you saw, I added Disney. I dropped AMC. I'll be doing that often. Our webinars will start again, by the way, in January. My special reports and the futures and that's all coming back too. Okay. So when we take a look, you're clearly in an uptrend. When you look at the swing line, and this is a chart without a swing line. I love swing lines because I can take your children. Give me a teenager, and most of them, if I sit them down and they'll keep their mind centered and I teach them a swing line, they at the end of a day will be able to say the market's in an uptrend, a downtrend, or no trend, and what is the risk associated with the trend? What number should it not take out? How do I know? Because I've done it. Did it with my own son. I've done it with other people's kids. I've done it with my best friends. They'll come over. They'll have their kids come over here to get an education. I'll knock them off, and I start them with that inevitably. It's in the charting course. It's so simple. But until you take out 38.74, and that's the low right here if I'm correct, 38.74, you have a pattern of higher highs, higher lows. And what I love about swing line, it's going to look away from all the gaps that are left on a chart too. The pattern is bullish because you have the 18-day average of close about to cross over when we reopen in the morning, the 100-day at 38.82. Now, how do I know that's going to happen? I know it's going to happen because when you put on the 18-day average, you're going to lose, go back 18 days, you're going to lose lower values, have higher ones, and because of that, the number's going to climb over. It's really that simple. Where's the resistance? It's at the upper Bollinger Band, but there's other resistance. I don't show you in these window envelopes. They're very important. They're deviations from the 18-day average. They run exactly parallel to it, unlike the Bollinger Band, which does not. But for the purposes of this video, that is a major resistance zone at 39.71, and the market is overbought. Overbought markets don't attract a lot of new buying. And in a thinner market condition, I think it's a fair warning, it's that somewhere between here and that upper Bollinger Band, the pros are what? Probably stepping out of their long position. In Apple, you are overbought, not trending. You have a lower low, higher high pattern. I don't see anything yet to do. In Disney, you have higher lows, higher highs, but with just what I told you. What happens when you hit an upper Bollinger Band? You're not embedded. I teach that you take your money off the table. And that's what I think occurred at 155.65. I think the pros said, so long, love to be with you, and you're backing off a little from it, about 80 cents already. When we take a look at Facebook, the Meta platforms, what did you do? Same thing. Market gave the pros the choice. I think they came out there, and if they did at 350.89, you're already back to 346.22. That doesn't mean the trend isn't up, it is, but it does mean you're very overbought. I think traders are closing their books on this, and they'll take a fresh look at it come Tuesday. On the XLI, this is where the traders, I think, close their books on this break. Now, if it comes back up, which it's been doing, it's called a vertical price rise because every day, instead of taking on a previous day's low, just making higher highs. Well, that wears thin after a while. You can't keep doing that day after day. So between here and that upper band's a problem. I already know, I know where the window envelopes are because my subscribers in the morning see them. You're in a resistance area. Semiconductors, I love what the market did. Over the weekend, when I put out the weekly subscriber videos, and instead of daily charts, we use weekly, you'll get to see this picture a lot clearer. Suffice to say, the correction that we had seen develop from back here at the beginning of December ran its course. Now the markets came back, negated the downtrend. They are not in an uptrend on the daily chart. You have a lower low, higher high. They're void of trend, but they've rejected that decline that the market had. On CNBS, I'm so inclined to say CNBC, but CNBS, lower low, higher high. So when you lost the embedded reading, and this is what an embedded reading looks like. On an embedded reading, when you have these, you're looking to sell these rallies, these peaks. Is there a way to get them? Yes. Do I teach it in my course? Yes. Do I teach it in the enhanced Bollinger Band course as well? Yes. But when you lose the red line over the 20 level, 21 specific, I think you're going right back to the 18-day average to regroup. Nothing works all the time, but more times than not, you will see that's what occurs with it, and then the game starts afresh, and we're not there at this point. In the home builders, this is again one of these vertical price rises, but the very first challenge of the Bollinger Band, for those of you that have taken the enhanced Bollinger Band course, think of what you got here. You hit it. What do I teach? You're not embedded. You're out of all your shorts. And that's exactly what I think the pros did, and I think they're just sitting here observing. And it's a vertical price rise. Try to catch this. Why don't you buy it up here? And if it keeps going down, how much pressure you're willing to take? It doesn't make sense. I don't know where it'll peak. I don't care. It's not trending. In the energy sector, you are in an uptrend. This is the support zone. I do think the pros are buying it right here, and I think they'll keep a stop right underneath this low of this day, 54.26, and I think they got their fingers crossed hoping that you don't get this craziness at the end of the year and that the trend holds up, and the market might look at the 57.78 level. In the emerging markets, you failed right against the 18-day average. However, any close now over 49.01 on a settlement, a closing price, will get interesting. That might attract buyers back to this market. In GLD, I think the gold traders were doing well with both hands, buying it this morning. I think they came in, they were buying the combination of the 100, the 18-day average, and I think they were flipping it out. The in and out traders at the 200-day average, the gray line. That's what I think they were doing in volume. I mean, to me, that was a pretty easy setup on the trade. Now I'm just looking to see, does it embed for something more as we go into 2022 with all the inflation talk that we have. In the minors, I've been very friendly, and look at, you're starting to embed. Both numbers are over 80 the day before and the day before. You have an embedded reading, which tells me on the breaks into these zones, I'm looking for buyers to step up and hang in there until the red line closes under 79, looking again for a retest of that upper Bollinger Band. COPEX, today was the day where I think the pros said, so long, thank you, love what that trade did in that copper color because you hit the 200-day average. It's so close to the upper Bollinger Band overbought. I think they took their money off the table. TLT, bearish. Now, in the future side, I don't mind telling you, I've been telling my traders to be short, and today we started covering if they were listening to me. And this is what I put out in my morning subscriber video. So I have losing trades, I have winning trades, believe me. This happened to be one of the winners, and you're oversold, you're down to the bands. It's time to take some money off the table. That's what I think. Doesn't mean you can't go lower, but you don't need the last penny out there. And look at this turnaround in FXE. You're overbought. I don't think you're going anywhere. I think you're caught in that sideways action that just isn't going to do too much one way or the other. Now, as you always hear me talk, I talk about what I do in the futures. Do you know why? Trading TLT, what do you think it's based on? Futures contracts. When you're trading your DIY, your SPY, what do you think they're doing? So we offer this. We have a whole staff of people that are writing about the energies, the financials, the grain markets, the meat markets, the soft markets, special reports on what we think out there on technology at time, how it's impacting different things. But it's all there for you to apply one way or the other. So if you've not done this, you should. If you're an ETF trader, this is right up your alley. We talk about what the option boys are doing, where they're doing it all. We want to give it to you for free. We're not asking you for any money. How do you get this? It's really simple. You go to our website, it's under free offers. This is only available to people that have trading accounts in futures with us. But we'll give you the free offering so you can see what you're getting from that, because if you do that, I'm telling you, I like what it does on the ETFs and the like. I'm Ira Epstein. You have a good day. Don't trade big. I'll talk to you tomorrow.